Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone is doing well. We are just one day away from options expiration, and that means that we're going to have a lot of volatility around open interest size as these options expire and as the bulk of that attention rolls out of October 18 expiring options and out to the November 15, or mostly November 15, the third Friday of next month. That's one thing we need to be aware of. The other thing we need to be aware of is, well, frankly, what I've been talking about since last Friday and probably most of the year. Why be so bearish? I don't know where the bearishness would be in an environment where, again, we're seeing rate cuts. Gang, I hope I sound like a skipping record at some point, because it's a pretty good tune. Buy the dip, please. You know who's talking about tops? People who aren't long. That's it. So you know what, Rob? Okay, yesterday I said, show me your positions, and I don't even really need to know what you think, because I'll know by your positions. This is the recap. This is the current recap of the trades in the Sector Secrets Mastery. So as we get to this third Friday of the month, we're getting out of 3 of these positions, and you can see which ones, because they're the ones that are going to be expiring right tomorrow. And you also get an idea of where we got in, right, and where currently we have scaled out. All the entries, I do mean all of them, and all the exits, right? Whether that's an optional, whether that's the first target, whether that's the T2, or, so you might say, Rob, how do you scale out? There's a first target. Sometimes I might have an optional if I'm not certain about the follow through, and that would supplant T1. Then we go to T2. That's the second target. And T3 is my last scale out based on either I hit a price and I'm just out of contracts, or a lot of times it's expiration, or it's an event of some sort. So let's say I'm long and we have the FOMC. I might choose to get out. Let's say I'm long and we've got earnings, right? I have got an event and I'll choose to get out. So that last scale out is T3. And ideally, I'm able to scale into a trade with just 3 contracts, where I could scale out 1 each one. Or if I had 4 contracts, I could scale out across those 4. So multiple contracts are really important to do what I teach in the mastery. And that's why we just finished doing a class on position sizing and the risk management inherent to multiple contracts. So this is what we have right now. Is there anything bearish here, right? Show me your book, right, Rag? And that's all I really need to know. So that's where we're at right now. And as far as NVIDIA, RW says NVIDIA will be nice as far as a trade today. The follow through, exactly. RW, exactly. I get your gist, right? Not getting in today, but we're at 140. Hello, I'm not going to chase it up there. Although Momo folks probably will. I mean, Momo folks is not a higher high that they can't resist, right? Good for them. I am very grateful for them, because they're the ones that carry the trade higher, right? So love it. Yeah, love it. So NVIDIA, well, where are we at? So I'll show you. We bought NVIDIA, and check this. Look, you say, Rob, what kind of return could I expect on NVIDIA? 25 October 130 calls that I paid $4.30 for. We scaled out yesterday at $5.95. What will those be worth today? You guys can check. 25 October 130 calls. They'll be a lot more than they are today. That I can tell you. So that's the idea. Find a trend, right? Gang, I cannot emphasize this enough. In an uptrend, when folks are talking bearishly, all they're telling you is they have no plan for an uptrend. they're not currently long. That's all they're telling you. Because picking a top in an uptrend and giving it some fancy name like I'm looking for the mean reversion is just picking a top, right? And it's blatantly stating that I don't have a long position right now. Therefore, the only thing that then makes sense is clearly it's overextended, it's too high, right? Now is the time to sell premium on whatever, right? And that's where I think a lot of traders get hurt. It's not that complicated. And just again, the first thing to focus on are the trends, right? And I get it. Look, if there's a bullish headline narrative and a bearish headline narrative, I've seen it time and time again. People will click on it. Don't be that person, right? That's the person who picks up the National Enquirer. Is that even a thing anymore? I don't know. Right? Don't do that. They know it's clickbait. They know showing you things that are potentially scary are going to get your attention, but are they useful? Right? They're really not. They're really not. So stick with the long side in the things that are outperforming. Not everything, frankly, is outperforming. I mean, some things are at this point in the month, 17 days in, some things are stronger than others. And it's kind of surprising to see KRE up here, but the Russell and the regional banks have all of a sudden just decided they're going to rally. Financials, so far in a pretty decent early look on earnings, they're up. GDX up. Metals and mining. So there's some interesting things at the top of the list for October. What's most interesting is what's at the bottom of the list. And if you recall, especially if you're in the room with me or if you're here at Charts and Coffee, there are a couple of things we said avoid. Things that were strong in September that we want to avoid. Staples. There's no reason to be in staples anymore, right? I see folks still trading staples. Thanks for watching me last month. We've shifted gears. I guess they haven't gotten the memo. Healthcare, leave it alone, right? It's really important that we be that merciless about things we won't trade. In fact, if building a watch list is too daunting, right? If building a watch list because something that you have a hard time doing because everything seems to land on it, especially stocks that are talked about constantly in the news and whatever, build a do not watch list, right? Seriously. Sometimes it's easier to talk about what you're not going to do than what you're going to do. So if you're getting at a point where, Rag, I'd like to build a watch list, but what do I pick from? There's so much that's strong. Just start with a do not watch list, right? Just start with a do not watch list. And those are little tricks that you'll find are super helpful as you're going through the process of figuring out what to trade, which is, at this stage in anyone's being here in Charts and Coffee, you might know we have a saying. What you trade is more important than how you trade it. Yeah, momentum traders can buy higher highs in an uptrend and probably do just fine. And buy the dip traders can buy into a little bit of weakness. The trend resumes and they'll be just fine, but they're both long positions, right? If they're long positions and things that have the tendency to follow through, everyone's going to make money, which is why years like 2020, right, are just so great because every style benefits from continuation when they're directional traders, which is what I am. I want to be a directional trader. All right. Next up is, let's see here. Occidental. All right. And Gwen, I'm happy to answer your question in our breakouts. Your question on SPX. Yeah, that's a class question. So I'd rather not get into the minutia of that. We don't have the time, but I'll be happy to do that a little bit more in the class breakouts. All right. Could I please review Oxy for a 2-month swing trade? Ren, I mean this with all why and what's 2 months, right? If you've been here for a little while, Ren, I'm saying this from the bottom of my heart. Why? Why Occidental? Why crude oil or any oil stocks right now? And do you think anybody, including me, knows where anything's going to be in 2 months? I mean, that's roughly the end of the year, right? So let's think of this. Maybe you're thinking about an end of the year trade. So the way the end of the year will work, and this is just a rhythm, is it's an intense example of sector rotation with this one emphasis. Whatever is strong will get stronger. Whatever is weak will get weaker, right? So some of it's window dressing. and some of it's tax loss harvesting or things like that. So I think going back to look at crude oil, am I going to be crazy about oil stocks? And I know Grandpa Buffett's in this, but he's in things for forever. And I don't know what his cost basis is, right? I think this tends to have a little bit more interest than it probably should because of Buffett. But, if you want a level to watch, I'd keep an eye on, say, the 50 level down to about 49 3/4. Ren, this is where I say, if we're traders, and to me, 2 months really isn't a trade, is it? Right? And number one, no one's going to know what's going to happen in 2 months. However, if I've got a 2-month window, I would say if you're going to do something like that, Ren, look at the weekly. So, I really do want to help you out here with your idea. But again, some things are just in terms of what traders want to do. I want to trade this stock for this amount of time, as if anybody knows, right? Which we don't. Although I'll tell you, this is where it gets tricky. Sorry, I'm trying to squeeze in my weekly chart into this view, and I have lots of monitors, and they don't want to cooperate at the moment. But I have these bright lights in my freaking eyes. Okay. All right. There we go. This is the weekly red. So here's something to think about. If my time horizon is that long, 2 months, 8 weeks is pretty long, right? Okay. What do we have here? And again, I don't love this, but I'm trying to give you something to work with. I would say the closer we get to about, there it is again, 50. That might be something to look at, as long as we can stay above the mean. But be careful, because the weekly time frame on my charts are in a downtrend. So I think this goes back to what you trade is more important than how you trade it. And this goes back to, there's only so many places that we can allocate capital. There's only so many places we can put our money to work. And then I ask myself, is this the best use of my time and money? Yeah. Question on XBI. So when I look at XBI, let's think about what this is. First of all, those of you that are unfamiliar with XBI, this is just just lots of different versions of biotech. It's a biotech name. I don't trade biotech, Panthers or Kings. I don't trade it. I'm happy to look at it. But again, if I'm looking for trends and I'm looking for follow through, XBI just wouldn't be on the list. Right? Is it bearish? No, not at all. But is it bullish? Not really. Right? Let me get this as clear as I can to everyone. These are 6 trending names, not just higher highs, not choppy highs. And maybe for some traders are thinking, Rag, okay, I get that, but I don't have a objective way to find a trend. That's a great place to start. How are we recognizing trends? Right? Because all of these, which are all winners at this point and will be closed out as winners, all of these are trending. So then I would say, one really cool thing to do is start off with, it doesn't have to be my tools, but just have a set of tools that differentiate something that's maybe choppy bullish from being straight up bullish and in an uptrend. So this is probably choppy bullish, but it's really not even that bullish at the moment for me. What I would say is crack open XBI and look at the individual stocks within the ETF. And then you can ask yourself, all right, stepping back, is there a stock within the XBI that's a relative outperformer? Is there something within this that's in an uptrend? Okay. So that's, I think the question presumes, Panthers, that it's worth entering. No, I mean, look, gang, if you're a momentum trader, there's 2 things I can tell you. One, this is not where you're going to learn about momentum trading, because I don't do it. Or 2, you can say, wow, if I'm chasing things higher, are there different or better ways to get into markets? Either selecting different things that have the better chance of follow through, or is this, look, gang, this is what everyone was talking about 2 weeks ago. I think I was bringing this up yesterday, right? FXI, MCHI. How come no one's talking about it anymore? Because 90% of traders are momentum chasing retail traders. They see what's on the news. Everyone talks about the higher highs. They parade across an expert who says this thing is going to infinity plus 1, and they buy at higher highs. That's just what they do. right? And then they want to turn around and blame algorithms and hedge funds and whoever else for their poor decisions. That's not what you all are, because you're here educating yourself. But remember, that's what's out there. That's the vast majority of people out there who say the markets are rigged because they can't spend the time to do what you're doing, which is educating yourself. So momentum trading is going to be what 90% of people do. Now, no one is going to talk about whether or not FXI is a buy now. This is what is it a great buy? Is it on my list of things that I want to do? No, but this is what, if there's going to be continuation, we might look at. Then I might look at individual names that might be a little bit more, like Baba might be a slightly better choice, but not much. So keep in mind, gang, if you're wondering where the trends are, start with having a set of indicators that allow you to recognize momentum and trend. Mine or whoever else's. I don't know many other indicators that have just sort of an on-off specific to the day, other than little crosses of moving averages, which are terribly. If you're using moving averages, I would say don't use crosses. They're so slow. They're terribly delayed. I stopped using moving average crosses. Let's say that 3 times fast. I stopped using moving average crosses probably 20 years ago. It's too slow. It's fine, but it's too slow. However, price interacting with moving averages is far more helpful. So if I'm taking a look at what's going on with XLK, yeah, we definitely want to keep this on the radar. We talked about KRE moving higher. Is this a trend yet? No, this is a Momo game. Be careful here. This is a Momo game. KRE is moving higher and traders are just tripping over themselves, getting into higher highs. And the ones that did it early are going to be fine. The ones that get in late are going to be the bag holders, as they say now. They're going to be that one last Momo trade. And that's where we want to ask ourselves, what happened before I saw where price is today? Like RTY is a great example. It's here at 2,300. What happened before it got there? Well, earlier today, it touched the daily price movement range. And then 2 sessions before that, it touched the daily price movement range. So sometimes the problems that we're experiencing as traders are just upstream from the decisions we make. Why are we trading something? Is it because it's making a higher high, that it has a trend? Where are we getting in? At the higher high or at a pullback to support? And these might seem like rudimentary questions, but time and time again, when I talk to traders, it's some of these basics. Some traders I meet have more sophisticated strategies than I use or frankly even understand. But I always ask, well, when would you put that strategy to work? What's the checklist? What's the visual? What are the signals? And that's where it becomes really artsy craftsy, subjective, right? And that's where the repetition of a process is so important. And that's without the repetition of a process, results are haphazard. Sometimes it's good, sometimes it's bad, but it's always the market's fault or Powell's fault or algorithm's fault, right? Take a look at the ES. We talked about this on Friday. This was a video I said, hey, look, gang, we've made a huge move. This move changes everything. And that was as hyperbolic as I will get. I don't like to talk in hyperbole, but it was true. It was an important move. After a prolonged period of time in a stuck market, we broke out. Now we've gotten into a trend, right? But oh yeah, it's overextended. And I think Tuesday was doomsday. I did a free video on Tuesday and said, please look for things to buy on the dip. And that's what we did. Let's normalize talking about the positions we have as a substitute, a much better one for what we think and what we feel, as if my feelings matter in the markets. Let's focus on the long side. Let's focus on the relative outperformers. And let's get to it, gang. This has been a really good year for account growth, and we're into the last quarter, right? What are you waiting for? Find the process that's going to allow you to find the stocks with follow through, buy the dip, right? And then go enjoy your life. I'll see you tomorrow, same time, same station, gang. Be good to each other.